following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you're having a good Thursday morning there in the States. I'm in Asia, in case you hadn't been notified. We're going to take a look at a couple of things here involving the S&Ps immediately. And by the way, a couple of reports out today. Good gracious, hit the wrong key there. Durable goods, 8:30. Initial jobless claims on a Thursday at 8:30. Bloomberg Consumer Comfort Index, 9:45. A highly watched stat. Not. And then you got some Fed balance sheet stuff after the close today. EIA natural gas inventory at 10:30. And good morning to all you dinners. So, even though we had a little bit of a pullback in the S&Ps, again, I want to consider this noise. This is our 240. Had a little bit of a breakdown there. I'm showing it right now in the den. And again, you know, the long-term breadth is still pretty much intact on the daily and the weekly. So I know you guys that watch the show are probably listening to me like, you know, where's the edge? Where's the edge? The edge is probably not to get short here. And here's our daily. There's that all-important 2183.50. So, you know, had to close above yesterdday morning's show. We were kind of spinning around up here. But again, you know, I use these to play defense and to orient stops and, you know, to really try to leverage trades against some of these inflection points as I'm showing them right now. And really the fact of the matter is, you know, when we come off, what if we come off 20 points off the recent highs off the S&Ps? What are we talking about? We're talking about a minuscule percent move down so far. So don't get too excited. This could be considered noise on the top. Trying to get our currency server running here so I can access some currencies while talking about this. So that's the situation on the S&P. So what do you do now? You got a couple of options here. In my opinion, you know, we're kind of in no man's land, even though we're at the POC, which is at 2070.71 on the daily. You got a hint of a new profile attempting to appear this week. If this still stays yellow on the weekly, and this is all in the scanner, we're going to have a new kind of balanced area up top here, new inflection points, possible some new support areas, and obviously some new resistance areas. So I'm kind of, you know, still sitting, just kind of waiting. I don't want to, you know, start thinking, oh my God, I'm going to miss this ultimate short move down off of a mega year rally. I'm just kind of sitting tight here. I'm just considering this to be kind of a wait and see situation. All right. I think we're getting our currency server back up here now. And let's see. All right. Let's hit crude. This is one we talked about, you know, with the Canadian dollar looking a little devalue-ish. Crude oil made that big run up and that kind of reversal from outside those weekly unfair highs at 48.06 on the October contract. We talked about the possible next leg down, 44.85, and that unfair high on the weekly, 48.06 sitting there. So trying to, again, get our currency server back up while we're talking. 44.85 is that kind of support on this right now. You know, I'm kind of a little bit non-directional on crude. If you're watching the show, you kind of heard me talk about that. We talked about that weekly close above and then 48.06. Possible not everybody being out of this trade from the short side, but that was kind of a foregone conclusion when we started really diving below 48.06. So again, kind of within a balanced area on a profile that's kind of edged down on the long term, just keeping that in mind. Not a lot of direction here, and the next time to pick a battle below on crude oil is 44.85. Gold. Well, kind of broke below this 1347.48, and I'll tell you, my stance on it has been to try to just block out the short side and take the longs when they're offered. I think Tom's been a little bit in the mode of this thing could pull back some, and I think he's been probably spot on this. But what I'm looking at is, again, trying to figure out, where's the next chance to catch a bid, and that now next chance is 1295.96 down here. So we're kind of in a area where there's really no good place to play defense. Had a profile up here above 240 action last couple hours. That's kind of bearish in nature on the short term. So again, I hate to tell you this, but sometimes not having a trade on is a trade in itself, and that's kind of the situation on gold right now for me. I don't want to try to get mixed up and short this thing, or even that's the case for S&Ps for me right now. So the notes, God, what else do you don't say anything about the notes. They're just kind of sitting on the bid as usual, blocking out the short side on that one too. The November beans, definitely been able to use 1017 as defense, 1015, 1017. I really think 973 is probably in order here, and then 965 dollar, just to hit the usual suspects here. Kind of got a nice little bounce off the DMZ 94 to 94.21. If you're not in this trade already, it's kind of not a great risk reward. Understanding that the targets up top for me are going to be around 95.20. All right. And the first segment, we try to hit as many things as we can from the, let's take a look at silver. Here's silver, and we talked about kind of waiting until we got down into this area, this general neighborhood around 1855. Let me move this up a little bit so you guys can see this. There we go. I'll try to dial up the font size on that on the break there. But this general neighborhood, this is kind of in my book, this is an area to be buying support on silver. Let's get down into the daily here. That's the weekly. There's really nothing on the daily. You've got a little bit of a help pattern here on the 240s first profile that's appeared almost 75 cents an ounce on silver down here. So right now, even though gold may drag this down a little bit further, I think you still got to look at a trading opportunity around this level on silver from the long side. Natural gas got some inventory coming out at 1030. Talked about, the ultimate targets on this for right now is going to be that 2.846. Remember that report? And we're kind of getting in that neighborhood of the targets right there from the bounce at 256. We'll be right back, guys.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, guys. Okay, sorry about that. We're on a analog line now. We had to look up a little issues on the network there at TFNN, but we're back. Taking a look at natural gas, I had talked about that a little bit before the break. I got some reports coming out, kind of in the target neighborhood already. And what I'm going to do is I'm going to pull up some currencies here really quick. This is the euro. And we talked yesterday. I'm kind of generally bearish on the euro if you watch this show, but we had a little bit of an opportunity at 112.48, 49 yesterday. We bounced right off of that. That was, a little bit of a trading opportunity. I'm not looking at it as a long-term investment by any means, but interesting how it's nice to wait for the market to come to you if you're thinking about making a trade on a product, and these daily inflection points are pretty powerful. The British pound coming off a little bit today, but I love how this thing acted around that 130.19 on the weekly, got above there, and then retested it about a week ago. So what do you do with this now? I'm a bigger fan of really being long this now than short it. Here's the 240s. As you can see, we changed tone. Then we kind of had that weekly confirmation right in there. And there's that retest for that weekly unfair high around that 130.19. But these 240s are now coming down into support again. 131.70 is the big number there. I think we've hit it about a couple hours ago. And in my opinion, you've got another chance for a long on the British pound. Let me reorganize my screen after trying to get the telco right here. Aussie dollar. Still like this is a basing situation around 75.87. That's all I'm going to say about that one. The Japanese yen still hanging in there, but, man, looking kind of scary. I'm still looking at this from the long side in the long term, but, again, we're very concerned that this thing could do a flush just to get a lot of people out that are taking my attitude on this. So beware of this. I don't like how it's not really bouncing off of the weekly unfair lows there. Okay, Doug, let's go back to our other machine here. All right. Let's take a look at Apple really quick. Talked yesterday about this. This thing still not really is, showing a lot of, bad signs here. First cracks in the armor really happened again here, but on the 240s. But again, you got to step back and look at this. Had a couple of emails. Is it time to get short Apple again? In my opinion, you got to wait for some bigger and better signs on this. And remember, the S&Ps could drag this thing up. McDonald's still love this trade. Talked about it yesterday. Just really, really killer setup to happen on the weekly. Now we're eclipsing this 115.19 area. Where's the next level down on McDonald's? Probably in the neighborhood of 107.30, that area. Get some market help. This thing could, like we did yesterday, kind of had some get some market help. This thing could act just like we had yesterday, a little bit of market help. This thing could really start coming apart. And you want to be shorting weak stocks as opposed, in my opinion, to shorting the S&Ps. If you think the S&Ps are going to go down, you've got a little bit easier minefield to operate in by trying to play the relative strength game, or relative weakness game in this case. All right, we got to look at old HPQ here. Pre-market down about 6% this morning. Looks like we're printing about 1345. This is another kind of before an outlook earnings type situation. You want to kind of tread a little lightly before situations like that happen. And this is another good example of it. We're not going to pull a Kramer and start rolling the dice before these earnings.
So we're down below daily profiles now, and this is definitely something you got to kind of wait and see. I don't think you need to be looking at this to try to pick up anything on sale down here, even though we are at the weekly unfair highs with the gap down this morning. We're at around 1338, that weekly unfair high. It is a trading opportunity, but again, I mean, you've got a stock that may continue to go south if we have any type of market pullbacks, but definitely coming down into some major inflection points here.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
guys. Back. Just thanks for suffering through the tech issues we're having this morning. You got to love Verizon. Anyway, we were finishing up talking about HPQ right before the break. HPQ, again, I mean, we kind of come down to that 1338 area. It's been a strong stock, but some shocking news. And, just got better longs out there, in my opinion. Let's hit the XLE. Kind of holding up pretty well here. Above these 6903 areas on the weeklies. I think crude's going to come off a little bit more here, so might want to just kind of wait a little bit on really digging in on some XLE stocks or the XLE in general, but astonishingly holding up pretty well. XLF, financials. As a whole, didn't come off that much yesterday, but let's take a look at some of the internals here. JP Morgan, and we got to look at Goldman Sachs, of course. I don't think JP Morgan's a trade. I had an email about that. Just wanted to pull it up. Goldman Sachs, we talked this past week about wanting to get back down below 163.35. I'm still going to kind of stay with that notion. And we're going to look at Bank of America, one more stock in the XLF. Not one to be shortened for sure. Showing some strength for sure on Bank of America, but I can't bring myself to really buy the financials right now. Let's take a look at a couple more in here in the financial sector. As we go into the ETFs heap grid in the scanner, we're going to pull up the financials. Ranked pretty high up here on the dailies, not really wanting to back off. And looking for some things that could be of note on the short side to try to increase the odds here. GGP, we've been looking. Ooh, that's ugly. Hartford Financial Services Group. You really can't find a better short than this one, just sitting on the edge of the cliff. Ooh. Had plenty of reasons to move up with the market, and here's the weekly, just nothing doing on this thing. So, HIG, not a bad anomaly in the XLF sector. A couple other ones here. Let's actually do a couple of our custom sorts on this one. Well, nothing doing there. MetLife, MET. Would love to see this thing get back up into 42.08. That's not really happening yet. Not the best scenario in the world. Let's look at uptrend reversals on this one, on this particular ETF. Progressive Corp. Yeah, this is kind of a no trade. Forget that one. Just trying to do some custom sorts here on the XLF as we drill down into it. So let me do some manual viewing here. And what I'm looking for are situations, I'm kind of looking at the dailies and the weeklies here, and I'm just looking at, what might have been in somewhat of a downtrend, and let me just pull this sort up so we don't have to even, okay. Allstate, let's take a look at this one. Yeah, I mean, sometimes when these things break, these weekly profiles, they really get some momentum on the downside. And I think you've got a pretty good setup here on Allstate, ALL. I know you could be looking at this going, wow, aren't we at support right now? But kind of cooperating with the market move down lately in the past 48 hours. And not the strongest stock in the XLF. Hasn't really kind of moved up as the XLF has recently. So any type of market help. You probably got better shorts out there, but this is one to kind of keep on the radar screen. And let's take a look at, we don't have my favorite setup here. There's Hartford, Kimco Realty. Yeah, this is one that's broken on the weekly, last week actually was a good setup. And right now you got the daily sitting down here, not wanting to get away from these daily unfair lows, and we could get some whoosh sounds getting below the 29.52 area on. I'm sorry. On the stock we were just looking at. I cannot remember which one we were looking at. Kimco Roki, I believe. Here we go. Yes, sorry. KIM. You know, when I'm in the Philippines, my setup's a little bit differently, so I apologize here. Weyerhaeuser. Let's take a look at this one. And I think I hear the music in the background, guys. So we're going to be right back after break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
It's flustering me. I don't know if you could see. I don't know if you could feel that. You know, I was reading something about Colombia this morning. I always read that the news on Colombia because of Juan, our friend Juan Villegas down in Medellin. And it says, what's the news here? And we're going to take a look at the cold cap after this, of course. FARC has reached a peace deal after 52 years of war that has killed over 220,000 people, blah, 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 blah. Forecast that the peace will add a 1 percentage point a year to the economy, although his optimism has been disputed by many economists. The agreement will be put to a referendum in October. You know, I don't know if you kind of know the history there, but you know, they had a president, what, I don't know, was it 15 years ago, 20 years ago? He finally got just sick of it and just put a hard foot down on the FARC situation, all the kidnappings, and basically told him, he said, look, we're going to give you a third of the country. It's some nice swampland in Louisiana. I'm just kidding. But it was, you know, the kind of the Amazonian type part of Colombia. And said, look, stay there. Don't leave. If you leave, if you kidnap anybody, we're just going to come in with Black Hawk helicopters and kill everybody. Sorry to family members. Apologizing ahead of time. And it really did just, you know, it really did change things. And the guy took a seriously hard stance and cleaned up quite a bit. And that's kind of, you know, in this country, there's, you know, there has been some form of corruption along the way. And they've got a president here now, Duterte. I know you've probably been reading human rights activist groups talking about all kinds of things with this guy. But you know what? It's amazing how safe everything feels here now, because he's basically just said, you know what, we're putting an end to it. There's going to be some collateral damage, of course, at the beginning, just like Colombia, but interesting times. All right, so we're going to take a look at the coal cap in the scanner first, actually, on the indices. You guys ever been to Colombia? What a beautiful place. And wow, voila. Top of the heap on our daily. And let's look at the and the coal cap is the Colombian index. Doesn't have too many components in it. But this is the situation here. Here's a weekly on the coal cap. I really feel like we're going to eclipse 1380 without even looking back. I'm not looking at that as resistance on the Colombian Stock Exchange. All right, we're going to take a look at a couple of stocks now. That's my global commentary on the wild and crazy. Here we go. We're going to take a look at Intel. We hadn't looked at this in a long time. And somebody's asking in the den why I like Colombia. For one thing, you know, the Colombian peso got beat to crap against the dollar. I mean, I was there, I think it was, I want to say it was like 3,400 per dollar, 3,400 Colombian pesos per dollar when I was down there 6 months ago. Down there with my nephew. And that's kind of cool. That's one reason to like another country. And the time I was there previous, I think it was around 1,600. So you got a nice little bang for your buck there. But you know, it's a high Andean rainforest right around the rim, and around Medellin, excuse me. So I stayed around that area, and it's one of the more beautiful valleys that you'll ever see. And the weather, talking about why I like it, the weather, if you've never been there, they call it that particular city, the city of eternal spring. There's obviously different places. Barranquilla, Bogota's cold, Cartagena's just mega hot. But Medellin, they call it the city of eternal spring. And it's 75 during the day and 65 at night all year long. And I get commissions from this particular airlines. It's not Frontier. It's what's the other one? Spirit. You can literally catch a round trip ticket from Fort Lauderdale to Medellin for about $170. That's another reason. Here we go. So, and people think it's like going to another universe to get down to Medellin. It's like less than 3 hours from Fort Lauderdale. So instead of going out and seeing Tammy in Vegas, you can go to Medellin. Easier. quicker, cheaper. All right, so Intel. Okay, so the reason I pulled this up is because, we're sitting at some unfair highs here on the weekly, relatively wide profile, but, some guys are saying, is this thing over? Why hasn't it really made new highs lately? This is a strong stock. My general feelings towards the market, overall is that we may climb higher, and it could drag some things up that have not been showing relative weakness. So, I'd just as soon stay away from Intel on the short side, and then try to look at trying to trade breakouts above that 35.38, 35.30, which are those daily unfair highs and weekly unfair highs. Let's take a look at Merck. And of course, we got to look at Bristol Myers after this. All right, so it looks like pre-market 62.70 we're trading. This is our daily unfair highs are 63.67. So, there's really no leverage to step in and make a trade on this right now. Support on this is going to be around 61.72 on MRK. That's your first support. You got kind of massive support at 58.50 on Merck. Let's take a look at Bristol Myers. I used to hate this specialist. And the reason I say I hate these specialists sometimes is it just kind of takes me back to the late 90s. Kind of So's was kind of out of the barn, and it kind of became a little more semblance of sanity doing some day trading and trading against the specialists back then. You had no Archipelago and all the other ECNs, and you basically had to deal with one human being down there on the floor of the New York Stock Exchange in whatever mood he was in that day and how bad he wanted to rip you off. Well, that was my take on it. So Bristol Myers, I just remember the guy. I had a personal vendetta against him. Anyway, so as we look at this, what do you do with this kind of sell-off and all the bad news that kind of came along with this? We talked about this the other day, actually. 59.95, a weak stock that was kind of rallying up into profiles that appeared below price action, and we got that kind of cool pullback off of that 59.95. So again, the scanner is going to pick out things like this for you. This is a story stock, obviously, but a nice little setup. Worked out quite well. We'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long
long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. And showing Disney right now. We were talking about Columbia earlier, so we're going to get focused again. Disney, something's wrong here. I really like being able to play defense above 96.89. Any type of market pullback should be able to drag this down. And if the market doesn't pull back and rallies, you want to be in stocks that are showing that relative weakness, in my opinion. And let's take a look at United Health, UNH. Never had a problem with this specialist. He's an okay guy. Just kidding. All right, here we go. So decent pullback yesterday, 142. I really did the entire, travel of the fair auction on the daily. Unfair lows at 139.72. We kind of closed around that area. Kind of had nothing to write home about, but kind of had been showing a little bit relative weakness of a strong stock. But, what do you do with it now? I still, let's see what's happening this morning. Hold on. Looks like we're trading 139.87. Yes, we're not printing yet. Okay, on the weekly. So, see, this is, they always talk about, oh, it's a healthy pullback. It was necessary. Don't worry. Dollar cost average. You'll never hear that come out of my mouth, by the way. Guaranteed. But United Health, it's a strong stock on the long term. Here's our weekly. And, we're basically just kind of coming into the bottom of the profile on the weekly. So I don't think, again, this is anything to really look at from the short side on the long term. You've actually got somewhat of a buying opportunity down here, in my opinion, on United Health. We're going to look at Verizon only because they're the culprit this morning between me and TFNN. So, looks like we're printing 52.75 pre-market, so up a little bit here. I like this setup actually a lot, and I like how we kind of had that daily unfair low around the same area. This is the weekly. Hadn't been one of the strongest stocks lately, but I think you've got a decent little trading opportunity here with stops below 52.21. And again, we always want to let the market come to us. It's kind of futile in my mind. I'm just completely lost trying to trade things. Either, unless I have a massive MO on the stock one way or the other, in the middle of these long-term inflection points, when we get into those, unfair lows, unfair highs, in certain market conditions, then it's time to get on the edge of your seat a little bit. And that's why we always say sometimes no position is a position in itself. Let's take a look at Pfizer while we're taking a look at a couple of XLV stocks. This is one I really feel like we could actually see 33.92 on this. There's a pretty good floor down there, but I like how this thing has kind of sold off and planed around down here, just kind of waiting. And it showed that situation yesterday. It came down with the market like it's supposed to. So I think you could orient some stops above 34.98 and actually see 33.92 on this. All right. Well, I don't have time to get into anything else before we close the show today. Stay tuned for Larry. If you've never seen him, you probably won't see him because he doesn't show his camera. But if you've never heard him, stay tuned. He's wonderful. Take it away, Larry.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.